What's going on, guys? It's July 12th, 2024. About to do a breakdown of the E-mini. We got an outside bar. I'm a big fan of today's price action because of yesterday's price action. How things lined up. What I mean by that is, what do I even mean by that? Oh, so yesterday was an outside bar. So this is the high, and this is the low. Hold on. I'm gonna make this one tick or whatever it's called. Coordinate. The low of this bar is 563075, so two ticks higher. Okay, and the low of this bar is 3 ticks lower. So do you guys see what's going on here? You guys see what I am trying to get at? Okay, so I just want you guys to see it visually. I guess, okay, since we're being legit, let me just do all four. Hold on. might as well I'm just gonna do it the right way. Okay, so I'm getting the high of the outside, this bar, 3175. What the heck? Five. Oh, I looked, okay, so one tick lower. There we go. I was looking at the wrong number. The high of this bar, seven, seven. Okay. So that's two outside bars in a row. Or yesterday's price, or the overnight price section. Okay. So this is what I mean by I'm a big fan of today's price action because it kind of made sense what was going on in my head. We have a bull run. I'm talking with my hands, but you guys can't see it. Leg one, pull back leg two, pull back leg three. Leg three, we have a big bar, and then we have a big bull bar, this bar, and then we have a bear bar. This bear bar is an outside bar. It's hard to see, but it is an outside bar, right? The high went above this high, and the low went 3 ticks below this low. So that's an outside bar. Outside bars are range bars. Am I muted? No. Okay. Outside bars are range bars. So I was gonna look for an outside bar. There's an outside bar right there. That means there are buyers here and sellers here. And that's what we got today. So if you're saying like, oh, how come the bear trend didn't continue? Because it was an outside bar, and outside bars are range bars, and outside bars have buyers at lows and sellers at highs. So that kind of explains the context of the price action we got today. I think it does, catching the outside bar. I mean, and there's not to say we couldn't sell off. I'm not saying this is gonna happen every time. We definitely could have, like, maybe opened, failed, and reversed, or maybe we broke out again and just trapped all the bears. But I'm just saying, like, flat out outside bars are range bars, and if we play a range, it's buy low, sell high, and that's the trades that worked really well today. Buy low, sell high. Something that also lined up, I talked about in the Discord, that this was the first touch of the higher time frame for. So look at the 45. I'm gonna delete this now that I kind of we talked about it. So in the Discord, I was like, someone was saying they're bearish. They're waiting for a break of the high of the day. I don't know if they caught this short, but it broke, and then it reversed down shorter, and that was what that person was looking for. But what I was saying was, I was like, it's hard to look for a short because, and I did catch that short, which is kind of funny. It's hard to look for a short because on the higher time frame, this is the first touch of the EMA over 20 bars. This is the first bear gap bar. The first gap bar after 20 bars is usually a buy or a sell. In this context, it's a buy. So I was bullish for that reason. And then I was like, oh man, yesterday's an outside bar. We're breaking out. And as soon as we got the reverse, I was like, well, there's sellers at highs. I wasn't trading this, but I also did not expect that sell off EOD. But just to put some context into the sell off, I think that's how it went down. It's an outside bar. And we had the first touch of the EMA, two reasons to get long. And then since it's an outside bar, yesterday's range, we failed breakout, reverse lower, we tagged the EMA. Not good for the bulls, right? Because they would definitely, you don't ever want to see that in a bull trend. Leg one, pull back leg two. Leg one, pull back leg two, pull back leg three. So yeah. So bar one. I have some food coming on the way, so I'm gonna make this a little bit quicker, like 5, 10 more minutes. We've been talking for about 5 minutes, so Another 5 minutes lines up to 10 minutes. Gap up. Bar one is a range bar. Bar two, bull bar, but we're trading within bar one's range. Bar three is a bear bar. I think bears want to get short. We're trading at the high of this range from yesterday. Bar four breaks out above the range. Look at this tail on bar four. So bears that got short here, if they didn't scalp out for a tick, which is really hard to do as soon as you get short. So if they didn't scalp out, they're trapped into a really bad short because look how this is the strongest close. So bears were buying back their shorts and bulls were buying the EMA after the gap up. It could be the start of a small pullback bull trend. Bar 5, 6, 7, 8, 9, 10. It's a buy the close rally. However, there's not a lot of gaps open. So although it's a buy the close rally, there's two-sided trading. There's only that's the only gap I'm seeing. There's a gap here. And the reason we want gaps is because that shows traders are trapped. The market never came back to let them out at break even. So there's a gap there. Buy the close rally, first pullback, bar 11, and it's the first pullback breaks the prior bar's low. That creates a bull flag, right? And then that bull flag leads to another leg two. And that leg two is a really nice wedge top. That's where I wanted to get short for quick. I traded on my phone at work. It was just a few scalps here and there. Here's that second leg, and then they break the lows, and then we get third, fourth leg creates a wedge. This is also a fractal wedge. So this is another buy the close rally. I kind of just skipped over that leg, excuse me. Leg one, pull back leg two. Leg twos are very good trades that happen all over the time frame. Leg one, pull back leg two. Leg one, pull back leg two. Leg one, pull back leg two. Endless rally. Leg one, pull back leg two. Leg one, pull back leg two. Breakout. Leg one. Deep pull back here, right? Look, leg one, pull back leg two. Deep pull back leg three. So learning how to count is great. Leg one, pull back leg two. Leg one, pull back leg two. Pull back leg three. So let me draw these gaps in. So we have a buy the close rally, and this gap is getting bigger, but we're also kind of getting climactic. We haven't touched the EMA in a while. And the gaps are getting bigger later in the trend, so that means the bars are also getting bigger. Is that we don't really know it's sustainable until the next bar. The biggest gap happened late in the trend. Is that gap right? The high of this candle? Oh no, it's not. I drew that totally wrong. Wow, scratch what I said. Wait a minute. What am I doing? What am I doing? This candle to that candle. Then there's a tick gap right there. Okay, so you can start to see bigger gaps later in trends. Here's a big gap. I got confused with the gap I drew. There's a bigger gap there. The gap there. I should just be doing this with the thing. So gap, wedge top, leg one, push leg two, push leg three. Sells off. First touch of the EMA. Bears get a gap here. It's a bear gap above the EMA. It's a weak bear gap because this is a bull bar. And the second leg is right here. It's very hard to trade that leg if you don't short this bar. And I think that's a hard short after this. If you were going to get short, I think it would be around here. Leg one, pull back leg two, 33. No, that's good follow through for the bears. However, 34 traps them. And then bulls get a second leg after the EMA. Remember how I was talking about the 45-minute chart? First gap bar. First gap bar right there. First gap bar right there. It's literally the same pattern on a different time frame. So that's why I mean price action is fractal, which is why I was pretty stoked about that outside bar having a range day. So yeah, leg one, buy the close rally. We're still getting gaps. There's another gap right there. Gaps are really important, guys. I thought they weren't important, but then once you kind of get the hang of where they're at and how to trade them and what they mean, they're great. I love them. You can't really unsee it either. That's why I'm drawing them, because once you see them, you see them. Sorry, welcome to the club by force. I got you in here. No, I'm just joking. But gaps are a good tool to measure strength. Look, all these bull gaps are closing. There's a gap here. So from here to here is a gap. So buy the close rally, leg one, leg two, market goes sideways. Get the breakout with 73. Big leg down, deep pullback. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Leg one, pull back, leg two. Depends how you want to count it. It could be opposite bars, or you can be counting. If you're counting tails, that's fractal. If you're counting opposite bars, that's the 5 minute. So you got to know how to count both ways. It's not one or the other. So because you can't really count this as one leg until you see this, right? So at this point in time, this is two legs, leg one, pull back, leg two. But then you see the breakout stronger, and you're like, oh, okay, this is one leg. This is the pull. So you see, that's the bet. Is like, is this that? Is it that? So yeah, breakout of the range. I didn't measure that. Let's see. Whoopsies. 1R was met. 1R was met. 1.5R was met of this range here to here, because this is the trend, sideways price action, breakout, sideways. Since this sell happened, it made this whole price action a range. So we have the spike, pullback, channel, range, breakout. In here, so in here, okay, we're gonna go over the market cycle, then I'm gonna call it good because I'm over the 11 minutes. It'd be a quick one too. So breakout, first pullback, channel phase, second leg, third leg, fourth leg. After the fourth leg, that's range. So breakout, channel, range resets the market cycle. After this breakout, we get a new market cycle reset. So you could say this is the breakout because it's the EMA, first pullback, so spike, pullback, and channel, buy the close rally, becomes climactic, and then leg one, pullback, leg two, second leg trap in a range. We are in a range. We don't know it's in range yet though. Sideways price action resets the market cycle. Bar 73 breaks out. That sideways price action is saying that the market cycle is going to reset. The breakout resets the market cycle. So the sideways price action is the end of the market cycle. The breakout confirms that it's resetting. And a failed breakout is also a reversal. A reversal is also a form of a breakout. Okay, I'm getting tongue-tied. I gotta go. The food's here. I'll talk to you guys later. Thank you for tuning in. Thank you for hitting me up on Discord. I'm gonna be sending out some more invites so people hit me up. Have a good one, guys. I'll talk to you later. Bye.